What's up, everyone? It's Scotty with MoneyVest. So markets here continue to rally higher to new all-time highs. We got the S&P 500 up a little bit over 1% to 51.57. The NASDAQ here closing in at just over 1.5% gain at over 16,200. And the Dow Jones here just over 38,700, up about 30 basis points on the day. Huge congratulations are in order for everyone who's been investing in the markets for the last couple of years, because the markets have just been ripping higher to new all-time highs, and we have breaking records after records. More importantly, for Nvidia, hitting up to over $925 per share, up another 3-4% on the day. So was AMD, so was SMCI. So the entire chip sector continues to power along here to new all-time highs. With SMH, the semiconductor ETF that I started buying, I'm up a whopping 45, close to 50% on that ETF in the last just few months alone. So that, of course, has seen a significant rally upwards. So we've got lots to unpack. Tomorrow we've got a very, very important unemployment numbers coming out, since it's the first Friday of the month. So I'm going to break that down, those expectations. We're going to talk a little bit about the technical analysis, of course, the market's valuation. As always, if you enjoy this video and find it helpful, make sure that you drop a like, and don't forget to subscribe to the channel. If you're just joining us for the first time, I would really appreciate the like here on this video, and also the links to our Discord and Patreon, like I said, is going to be down below for our members only private videos. All of our Excel spreadsheets, which are going to be moving over to our moneyvest.com website here fairly soon. And of course, the Discord access, which gives you access to all the trade alerts, the trade ideas, options alerts, and also options. Speaking of options, my win rate, my success rate in our community is really, really high. This right here is the Tesla options that I actually closed for a good 88% profit here. And the end phase call closes tomorrow. So my end phase option is going to expire tomorrow at about $130 strike. It's up 54% right now, because Enphase actually ended up closing below 130. So it's actually at 129.69. So I could not have kind of played this as accurately as it is right now, because Enphase, of course, was trading at one point at over 137, came down to 118, 119, and right now it's dead 129.69. And my call expires tomorrow at $130 strike. So even if it does, let's say, end up trading up to 130 and expires, let's say, in the money, that's going to be the best Goldilocks scenario, because I would be getting that cost of $3.39 per contract. So that's about $339 for the entire one contract. And then you add this number to 130, that's actually going to be my sale price, because as we know, with selling options, you're able to collect the entire premium, and then you let that expire worthless. That's ideal, but even if it does expire in the money, you get your shares called away, but you still do get to keep the premium here for the calls that you are selling, for the puts even that you're selling. So this right here again expires tomorrow. We'll find out what ends up happening here. So again, do join us down below with the link. There is a 16% annual discount. I've opened up a couple more spots here if you're interested in joining, and do connect with me on Instagram. My handle is going to be CASWRP. Would love to connect with you there also. So NASDAQ pushing up to 16,200, up over 1.5%. We got the S&P over 1% in the green, over 5150s. This right here, S&P 500 hits a new record high ahead of the jobs data. So again, tomorrow is the first Friday of the month. So we got unemployment numbers coming out, very, very important numbers. And the consensus for non-farm payrolls is 190,000, with unemployment rate sitting steady and strong at 3.7%, with private payrolls at 150,000, with manufacturing payrolls at 10,000, and participation rate at 62.5%, with average hourly earnings expected to increase 0.3%, with average hourly earnings year over year starting to come down a little bit at 4.3% for the month of February as well. So this is going to be for the previous month, because again, employment numbers are always a lagging indicator. Fed's Beige Book says the U.S. economy picked up speed while inflation, labor market cooled. So moving forward, you'll notice that the U.S. economy accelerated slightly in early 2024. The Federal Reserve survey found, noting that the outlook for the interest rates for the year was generally positive, and the latest findings by the so-called Beige Book dovetail with the comments by Fed Chair Jerome Powell. On Wednesday, Powell told Congress a few hours before the report that what we're seeing so far this year is continued solid growth, and he said the Fed expects to cut interest rates later this year if inflation continues to slow steadily towards the central bank's 2% target. So we already learned from Jerome Powell's testimony in front of Congress earlier this week, and what he basically mentioned echoes what we have already heard and what he's already said in the past. And this, again, the Beige Book kind of reiterating that the U.S. economy is very strong, the labor market is very strong, we're seeing very continued solid growth here, and the expectations for rate cuts are high. considering that inflation continues to move down steadily towards their 2% target over the long term. So that's their long-term core inflation target of 2%. Now, 8 of the Fed's 12 regional banks, ranging from Boston to San Francisco, reported a pickup in growth, and one district found a slight softening in the economic activity. And when it comes to inflation, the deleterious effects of high inflation haven't gone away. The Beige Book said that prices moderated again early in the new year. Businesses have also found it harder to pass their own higher costs on to customers, who became increasingly sensitive to price changes. And of course, the rate of inflation rose to 3.1% annually in January. While we're still above the Fed's 2% goal, it's down sharply from a 40-plus year peak of 9.1% in June of 2022. Now, one of the things that I've mentioned before is that a lot of people like to quote this percentage number on a year-over-year basis, how much inflation is actually up on a year-over-year basis. But the true definition of inflation should really come from the overall price index. Okay, so that's really what's telling us whether prices are higher or lower on a year-over-year basis. And the fact that we kind of quote, even in a political stance, Joe Biden and whatnot, try to quote that, inflation's down from 9.1%, now down to 3%. So we have seen over a 60-70% reduction in prices is factually incorrect statement, because prices are up from 2 years ago, from 5 years ago, from 10 years ago. Overall, inflation is up because prices of everything is up. Prices of milk, eggs, food, groceries, housing, rent, transportation, whatever it is, prices are indeed up from a few years ago, as many as 5, 10, 20, 30, 40, 50 years ago. The bottom line, what they like to quote here, is the year-over-year increase. And that's what we're seeing is slowed down over the last year, because in June of 2022, when inflation was up 9.1%, that simply meant that overall basket of goods and services, which is a CPI index, that is up 9.1% from June of 2021. So on a one-year basis, it was up 9.1%. The fact that we're now up 3% only means that prices are only up 3% from the previous year. They're still up, but they're only up 3.1%. So it doesn't mean that inflation's gone down or we're seeing prices come down. No, prices are still up. It's just a year-over-year increase that has slowed down to a much lower rate compared to what we saw in June of 22. So I hope that kind of makes sense, because I want to give some clarity to what we're really looking at. And just in general, inflation is here to stay. It always is. Prices over the long term continue to go up. It's just a matter of how much they go up by. And that how much they go up by is the rate of inflation. That's whether Fed's targeting at 2%. That's what's quoted in most media channels. But the real inflation indicator really is the price index. How much is the price of those goods and services and the basket of those goods and services up over a certain period? Meta and Nvidia, where do we even begin? I mean, these two companies have just absolutely crushed it. I'm lost for words, seriously. Like, Meta obviously pushing higher, 3%. It's done incredibly well, up over $500 per month, because there was some new bill kind of flirting around for a potential, TikTok ban in the US. But it's a pretty big deal for Meta and, of course, its social media applications. Nvidia, the big winner trade of AI, rose another 4.5% to fresh all-time highs. And this company is now approaching $2.4 trillion. Apple is at 2.6. If Nvidia actually becomes more valuable than Apple, that would just be the fastest takeover any company has ever seen or done. Like, Nvidia's growth has just been like wildfire, like absolute wildfire. This right here was an economist suggesting. David Kelly, chief global strategist at JP Morgan Asset Management, basically spent 25 years building and running macroeconomic models of the U.S. economy. And he basically said that interest rates will do a quote-unquote slow dance downward in 2024 and going into 2025. No, slow dance downward basically means that slow and steady decreases in interest rates is what the Federal Reserve is going to do. And this is basically telling us that he does not believe that there is a potential for a recession, because if there was a recession, the Federal Reserve likes to cut interest rates like that, right? Very, very quickly. They like to bring them down to 0%, start quantitative easing to help support the economy and start boosting some growth once again. But the fact that he's expecting a slow dance downward, meaning one rate cut, that simply means that they're going to do it in a very, very steady fashion, and there is no recession risk kind of looming over the U.S. economy. Something to keep in mind, but of course, there's probabilities for all different types. I mean, this is the type of market that gets people very, very crazy and insane with their predictions, as we've already learned from yesterday's video. Robert Kiyosaki and, of course, a couple other people expecting a 60-70% crash here, while other people continue to believe the markets have more upside and more room to continue to rally, and then some people in the middle expecting a soft landing, a no landing, a recession. So there's just so much noise. There's just so much happening in the background, and markets don't really care. Markets quite literally do not care. All they care about is artificial intelligence, just one simple word, AI, and that's it. That's what the markets care about, and it just keeps on plugging along to new all-time highs. Meta, Google, Amazon, Nvidia, Broadcom, Microsoft, Oracle, Adobe, even Tesla on the day thankfully was up. Apple here basically flat. We did see financials kind of pull back, healthcare slightly pull back, and then other sectors once again continue to participate. So all 11 sectors in the market were green. In the last 1 week, comm services and consumer cyclicals were the only two sectors that did struggle a little bit in the last 1 week. And comm services, of course, over the last 1 month has also struggled on the back of Google, which has been struggling recently. Coffee prices, canola, ethanol, soybean all pushing higher with lean hogs, sugar prices, volatility, cocoa, and natural gas selling off. Bitcoin back over 67,000 and Ether just over 3,900, just a little bit under $4,000 at the moment as well. Now, coming over to Bitcoin, so once again, coming back up to that resistance and that target of almost $70,000. Of course, still incredibly overbought here, so got to keep a close eye on how it trades. Ether, parabolic move to the upside, very, very overbought, almost breaking out. Of course, very, very nicely breaking out to over 3,900. And the next target and resistance is going to be at 4,800 for Ethereum moving forward. Talking about volatility, once again, getting a little bit of that rejection there at 15. Continues to trade sideways in this consolidation fashion. So this right here is the overall channel within which it's been trading. And of course, a lot of the markets are starting to ease into the idea that, okay, now things are getting better. Economy is strong, unemployment strong, people are making good wages, inflation is trending lower, and the Federal Reserve is going to start their process of quantitative easing very soon. So everything's kind of lining up really well for the markets to do what they do best, and that is to continue to push higher to new all-time highs. So this is a market that there's a couple things that you absolutely do not want to do, right? So there's a couple things that I would personally never do in this type of market. Number one, I would not be sitting out on this market, right? So for example, 82%, I'm still very much invested long, raising cash a little bit because I'm about to close some deals on real estate here. So that's something that's on the radar in one of the projects that I'm doing. So, but bottom line is still 80+% long invested in the markets, right? So that is one thing, right? So you want to be invested in the markets. You don't want to be sitting out on this type of rallies. Number two, when you know the trend is very much in the direction for the bulls, very much optimistic sort of environment, and so you're seeing markets kind of hitting all-time highs day after day, you don't want to be shorting the market either, right? Because a lot of people try to predict these reversals, and more money is lost predicting these reversals than in actual reversals and bear markets and sell-offs. So it's very important to kind of understand that trend is your friend, and the trend is very much to the upside. So don't try to predict reversals or don't try to short into this market, because bottom line is that if markets wanted to, they can really, really crush any short sellers over time, right? And markets can remain irrational longer than anyone in the world can remain solvent, right? And that is to say that we can continue to kind of beat a dead horse and try to predict and try to short and try to make money on the way down. But markets do what they do best over long periods of time. They continue to move higher, right? There was a very popular saying back in 2020, stocks only go up, right? Stocks only go up and they never come down. But of course, in 2022, everyone realized and understood the reality of how the stock market works. And it, honestly, like it kind of resulted in a lot of people leaving the market too. Like a lot of people, I remember those times, right? 2022 bear market, a lot of people threw in the towel and they were like, you know what, I'm done, investing is not for me. So these experiences can definitely scar you, but you cannot let those experiences kind of dictate what the future looks like and what your investment journey is going to look like over the long term. Everyone can have a bad experience with something, but when you know and understand that, okay, this is where majority of the wealth is made, investing, right? If you're not investing, you're simply saving, and saving, nobody's made big money by saving. Everybody's made big money by investing, right? So once you understand that, you will know the market moves in cycles. Right now, we're in a fantastic time. Right now, we're in a great time. Everybody's portfolio is probably trading at an all-time high. We're seeing amazing returns. We're seeing so many stocks perform well. But we have to understand that it took us a lot of fear, a lot of anxiety, a lot of pain, and a lot of market sell-offs and a lot of crashes for us to get to where we are. Right? We always look at the end result, but nobody looks at the process of how we got there, right? So if you go back just 2 years, I'm not even asking you to go back, to COVID times. Go back 2 years, go back to 2022. what we experienced as a community, right? And the bear markets, that is what it took to get to where we are now. So it's really important to understand that, okay, market moves in cycles. This is most likely not going to last forever. We got to enjoy it while it does last. And then eventually when we do start to see some pullbacks and sell-offs and corrections and bear markets again, which will happen again, I'm here to tell you that it will, then we're ready to take advantage once again. We're ready to take advantage of those opportunities because in the moment, right? In the moment, people will tell you the sky's falling apart. This is it. The stock market's coming all the way down to zero. This is the end. But in that moment, always remember, the recovery is far stronger than the bear market. The bull markets are far longer than the bear markets. And that is what's going to help you hold your ground and continue to invest for your future. So coming over back to the S&P 500 and the markets, of course, so SPX. Of course, another week of greens, 1% higher. This has been 3 consecutive weeks of green. Only the week of February 12th, we did see a bit of a pullback, but of course, overbought RSI and MACD, so just got to be super careful. Really, the strategy right now is quite literally nothing, just quite literally nothing. Selling calls, dollar cost averaging in broad-based ETFs or index funds. If there is a little bit of something that you want to do, that's what I'm doing personally, not really actively investing in individual stocks considering how they have already rallied so much and they're trading all at a big premium. So just sitting back, enjoying the gains, and there's not really much to do at the moment. Talking a little bit about the NASDAQ. So NASDAQ also pushing higher, overbought RSI and MACD, and resistance and target's going to be all the way up to 16,030 here, 16,630 or 16,300 basically. That's going to be the level to keep in mind, and that's exactly where we are at the moment for the NASDAQ. Talking about Apple here, and Apple continues to sell off. Unfortunately, even on a very strong green day today, Apple's struggling down to 169. On the week, it's down almost 6%, so my target's going to be down to 165 for Apple. So this right here is going to be that level to keep in mind for Apple here. Amazon, on the other hand, continues to kind of trade sideways in the 175, 176 level. And again, support level is going to stay put down to 155. And this right here is a potential gap that it needs to fill. Amazon does very, very soon. So resistance is going to stay put at 176, 177. Support level down to 155, down to as low as $143 for Amazon moving forward. Talking about Tesla, and Tesla here did see a little bit of a rebound. That's finally nice to see. Pushing up over 1.2%, so 178 is where it's at. Next target and resistance, obviously up to $200. We've found a huge resistance at those prices for a very long time, so we're not able to break out nicely above that level. I will be doing a more separate, more dedicated video on Tesla here very soon. Nvidia, I have no words. Again, congratulations to everyone. It's a little too overpriced and volatile for me, but like I said, it doesn't have to be for everyone. Investing is such an interesting sort of a game where you can pick and choose what you want to invest in. You can pick and choose how you want to invest. So there's a lot of different variables at play, and not everyone's going to find stocks that kind of appeal to them. Nvidia is a fantastic company, no doubt. It's one of the best companies, but I prefer AMD a little bit more than Nvidia, just because AMD almost always traded at a better valuation compared to Nvidia. But even AMD right now at $340 billion has seen a significant rise in a very short period of time. But nonetheless, both of them trading at all-time highs. Both of them obviously have a overbought RSI and MACD, so you got to be super careful here because this parabolic move, we've seen this happen before, and this has been nothing short of extraordinary from Nvidia. And again, what goes up most certainly comes down eventually. We've seen this happen over and over and over again. So please, if you are a smart, mature investor and who understands market cycles and understands greed and fear, you already know this stuff, right? I don't have to explain this to you, but sometimes in the moment, it kind of gets lost in translation. So it's really important for me to once again caution that yes, it's a fantastic rally. Everything's great, but just be aware that this is a parabolic move. And Tesla kind of went through a very similar process. Bitcoin went through a very similar process. A lot of individual stocks and even the markets have gone through a very similar process. And eventually all of them have come down. Not saying that it's going to crash 40, 50%. But of course, some profit taking, some pullbacks, some corrections are long overdue. Same thing is true with Advanced Micro Devices. Again, very, very strong move to the upside. A parabolic 129, 130% rally. So keep a close eye on both of these stocks here. Support level is going to stay put at 182 for Advanced Micro Devices. Talking about PayPal, and PayPal here on the day up over 65 basis points, still down about 3% on the week. So lots of consolidation sideways for PayPal, and support level is going to stay put at $57, resistance all the way up to $67 per share for PayPal. Another support sitting roughly at around $50 for PayPal. Lots of consolidation, and this right here is the downtrending channel of lower highs and lower lows for PayPal at the moment. Talking about Visa, and Visa already starting to come down. So again, RSI, MACD showing some signs of weakness here. Visa underperforming on the day. And next support really is going to be down to inside this green rectangle actually at 245 and 254. This company. Meta, new all-time highs at over $512 per share. Market cap now sitting at 1.3 trillion. Support level is going to sit at 488 for Meta here, all the way down to as low as 451 to as low as 383 for Meta moving forward as well. So very, very nice move to the upside for the company. Support level, like I said, is going to stay put roughly at 489 down to 451 for Meta. Talking about Netflix, and Netflix here also pushing higher, a little bit over 1.8%. Support level is going to stay put at 571 down to 556. Resistance and targets all the way up to back $700 per share for Netflix. And Google here also seeing a little bit of that rebound, up over 2% very nicely. Resistance going to stay put right over here at 140 to 144. So those right there are going to be some levels to keep in mind. Support level is going to stay put at 126 for Google moving forward. Talking about Microsoft, and Microsoft also pushing higher, a little bit over 1.7%, so back over $400. And resistance and targets going to be $420 per share. Lots of consolidation sideways in that range at the moment for Microsoft. Finally, Enphase consolidating sideways in this symmetrical triangle, breaking out to over 3.4% green, almost at 130. So we'll find out tomorrow's a big day for Enphase for me. We'll see if it actually trades back up to 130 or lower than that. And 130, it's going to be that next resistance and target to watch for Enphase as well. And then finally, we got Costco, which is also trading at all-time highs, pushing up over 1.6%. Did have earnings beat, revenue slight miss. I'll do a video on Costco separately to go over their earnings as well. So hope you all enjoyed this video and a complete update on the markets. Don't forget, tomorrow is a big day for the unemployment numbers that are coming out. So as always, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. Happy investing, and I'll see you all in the next video.